Alright, for this video I want to do a walkthrough of the IRS form 4797, and specifically what we're going to be looking at here is how to record bonus depreciation recapture when the asset you're using, the business use, falls below 50%. So the business hasn't sold the property, they've just had it to where the business use is below 50%, and so they have a recapture issue. And so all this is done here in Part 4. Recapture amounts under Section 179 and 280 Cap F when business use drops to 50% or less. And so we've got the full 4797 here, and it is part of the entire 1120S corporate tax return. So I'll cover all the forms and schedules that you're going to need to address here. And then we also have one slide covering some background on this issue and then more details on the fact pattern. So bonus depreciation in 179, generally you cannot claim these unless the asset is at least used 50% in your business. If it's below that, it's totally off the table. So what often happens is a business will have a new property acquired, they'll use it greater than 50%, claim the bonus depreciation or the 179, and then in a subsequent year, business use drops below that threshold, and they have a recapture issue. Now, when business use is below 50%, businesses can still claim a piece of the depreciation expense, but they have to use the straight line method under ADS. So you can't use MACRS, right? The 200% declining balance method. You can't use bonus depreciation, and you can't take Section 179 expense either, right? So none of these accelerated methods are on the table. You have to use the straight line under ADS. All right, so now how do we make these adjustments and what's required? Well, the first thing that's done is in the 4797 with Part 4. So we have to reverse the amount of bonus depreciation claimed, and then we calculate the depreciation that would have been allowed using the straight line method. And that's for all the years leading up to the current tax year. Now this recapture amount is going to be ordinary income. So this property here, they had a Ford F-250 truck, and so if I go back to the fact pattern here, let me just touch on these in the bottom here. So this business is a Florida landscaping company. In 2022, they bought a Ford F-250 for $44,850, and they used 100% for business, so they claimed the 100% bonus depreciation. So they wrote off the entire thing. Then in 2023, the owner was using the vehicle too much for personal purposes, and so the business use dropped from 100 to 40%. So business use is 40, 60% personal use. So the company has to reverse the $44,850 of bonus, and then they recalculate the depreciation as if straight line was used from the very beginning. Right, and so if we look at the 4797, at the bottom here, we have the line 33, where we report either the Section 179 expense or the other depreciation taken, right, in prior years. So we didn't take 179, we took bonus, so we're going to be working with column B. So 44,850 was what was claimed in 2022, so we reverse that amount. And then we recalculate the depreciation that would have been allowed using the straight line method in last year, right? So we only had 1 year of straight line depreciation that would have been applied. So if you think about this, we'd had 44,850. It's over a 5-year period, so 8,970 during the year. But last year being the first year, we used the half-year convention. So the depreciation expense that would have been deducted in 2022 is $4,485. So we've got the $4,485, and then the recapture amount is the difference there of $40,365. So once we have the $40,365, this is all ordinary income. So for an S corporation, we will report that value on line 5. So we have other income or loss, line 5, $40,365. And so we have attached a supporting statement there. So this is our supporting detail that shows that this is a recapture under Section 280 FB2 $40,365. So again, just to reiterate, the vehicle has not been sold, right? We still have the vehicle, but because business use dropped by too much, right? It fell below that 50% mark. We have to recapture the bonus depreciation that we took in the prior year. So we've got an income inclusion of $40,365. So now the issue is, well, now that we've got the reversal there and that income inclusion, how do we adjust for the depreciation for the current period? Well, we are in Part 5 because we're working with listed property. So we have the Ford F-250 that we had. Business use dropped by too much, so we're below 50%. So we have property use 50% or less in a qualified business. The cost basis, our original cost was $44,850. The business use now is 40% for this year, right? Last year was still 100%, but we have to recalculate it using straight line. So we've got a 40% business use. So we multiply 44,850 times 40%, and the basis for depreciation now is $17,940. Now, with a $17,940 of depreciable basis over a 5-year recovery period, it means that the straight line depreciation on this amount is now $3,588 for the period. And so we've also included the relevant information here for Section B, right? The amount of business miles driven, personal miles driven, the total. So that confirms our 40% business use. And so the net effect here is our depreciation deduction for this property is the $3,588, but we also have an income inclusion of that $40,365. So we can see here on line 14, there's our depreciation expense for the year for the vehicle. So we do still get to depreciate it, but only the part that's attributed to the business, and it's not an accelerated method anymore. It's the straight line method. And then we have our income inclusion up here of $40,365. All right, so that covers it for this tutorial. I hope that was helpful. Any questions, obviously, feel free to leave a comment below. I try to get to as many of those questions as I can. And as always, I appreciate you watching the videos, and I look forward to seeing you on the next video. All right, thanks so much, and have a good one.